myself Vaibhav. In today's session, we are seeing the British pound holding closer to the 1.4 level and moving forward. I think this bullish tendency is likely to hold. Of course, in today's session, the dollar has been king, but even in this backdrop of the all-around dollar strength, we have seen GBP holding its ground and in today's session, it hasn't really gone in any decline and rather it has tended to trade sideways. And I think for next couple of sessions, the momentum is likely to favor buy trades unless we see any fresh breakout on the lower side. So we will be looking at the technical point of view as well. And if you consider the data locket, we had plenty of data releases in the session to consider and most of the data points which we got earlier in the day were concerning the Germany and also for the euro area. For Germany, we got the employment figures as well as the inflation data, and both these data points are pointing to the uptick in economic activity. The unemployment rate has held steady at 6%, and jobs have been added by 9,000. And if you consider the inflation data, the inflation has now shot up to 2% from prior reading of 1.7%. So the inflationary pressure is showing up in the German economy as the demand has continued to outstrip the supply in the short term. And for the euro area, we got the sentiment data for the economy, industrial activity, and the services sector as well. And all these sentiment data is pointing northward. Economic sentiment is higher at 110.3. Industrial sentiment is also higher at 10.7, and the services sentiment has turned positive from deeply negative reading in the prior month. So for the month of April, we have this uptick in data points, which is suggesting to the improving ground situation in the euro area economies. And the same theme continued to play out in the US session also, where we got the GDP numbers for the first quarter of this year. And as expected, or you can say even better than expected, we have the GDP growth rate at 6.4%. And this is the first estimate, so uh, it can be revised in the later releases, but for the time being, it is substantially higher than the prior reading, prior quarter's growth of 4.3%. And as I said, it is even beating the estimate of 6.1%. We also got the initial jobless claims for the week ended 24th of April. And here also, the recent trend of the downward growth in the jobless claims has continued, and now for this week we have the total claims at 553,000, which is of course a lot lower than the prior readings, which used to be above the 600,000 mark. Now let's shift our attention to the technical segment. We will first cover the GBP USD and then we will also consider the dollar industrial average, which has consolidated closer to the 34,000 level and it hasn't gone anywhere in last couple of sessions. And even in today's session, the picture has not really changed much, but we will see if there are any emerging opportunities in today's session. So let's get started with the GBP USD technical outlook. This is the daily time frame chart, and in the chart you can see that on the higher side, the 1.4 level is holding the key for GBP and this is also the price level which is acting as a major hurdle. Even last time around, we saw this rise and steep decline. You can even say correction. And from there on, after due consolidation, again, the GBP is showing the bullish tendency. And as I said in my opening remarks, the 1.4 level is going to be key moving forward also. And I think the underlying bullish tendency is still holding well. And even after we consider these failed attempt to cross in today's session, we can continue to wait on the buy side provided we don't really have the break on the lower side below these 1.39 level, which is also the prior consolidation high area. So this is the price band which we need to watch out for. Of course, we have the immediate hurdle in form of these first resistance of this month's pivot point series, and that's where the price momentum stalled in last session, and it has continued to hover there in today's session also. So moving forward, as I said, if we get any fresh breakout on the higher side above this immediate hurdle, then we are pretty much likely to continue to see this rally northwards, and I think in due course of time, even the 1.41 levels can be expected. Of course, that will take time, and for us, the horizon is fairly short. We are not really going for swing trades, and we will be basically concerning us with intraday trades, if any, in today's session or maybe at max for tomorrow's session. So, if you consider these technical formations, both the regression curve as well as the pivot point series for this month, both are pointing to the bullishness of the GBP And keeping that in mind, it will be prudent for us to continue to look for the buy trades. And for that, as I said, this immediate swing highs on above which the GBP has already shown a breakout, and now it is consolidating closer to the high. So I think this price range can be expected to act as a near-term support, and we can look for the buy trade in the vicinity of that. So if we look at the lower time frame charting of the hourly time frame, we have this support in place around the price area of 1.39 to 1.392, and this is the price band where we have these multiple support factors in play, the confluence of 50, 100, and 200 SMS. And as I said while explaining the 4 hourly chart, also we also have these prior swing highs, which are expected to act as the near term support. So, taken together, these technical formations, we have strong support in place, and even if we consider the immediate price action, it has tended to trade above the support area. So I think if we are fortunate enough to get the entry after due consolidation, of course, anywhere in the price band of 1.392 to 1.393, we can look for the buy trade while keeping the stop loss just below this confidence zone. Maybe the price area of around 1.389 should be good enough for any trade in GBP while targeting the retest of 1.4 in near term, and eventually we can even expect the move beyond that. So here the risk reward ratio works out quite favorably. Now moving on to the equity segment, we will consider the Dow Jones Industrial Average. Let's start with the daily time frame chart. Here we have this consolidation which has kept the Dow Jones Industrial Average in a very narrow range for last almost 2 weeks. The Dow Jones has traded in the price band of around 500 points, and that has not changed really. I think on 2 or 3 occasions I have talked about the possible move on the lower side, but that's yet to materialize. But fortunately for us, we haven't lost money also, as the stop loss level wasn't really hit in all this session, and even in today's session, as the US Treasury yields have spiked, we are seeing some bearish momentum taking hold from the higher side, and given the backdrop of rising yields and also the stronger dollar, we can expect some corrective move. But of course, we will have to cautious, and we will have to be fairly sharp with our entries also. So if we are looking for any trading opportunity in the today's session, we will have to keep in mind this first resistance of this month's pivot point series, which is also coinciding with the price level of 34,000. So this is the same price area which I have been talking about for last couple of session, and that's where we are seeing reversal in today's session. So moving forward also we can continue to wait on the similar positioning while keeping the stop loss just anywhere in the vicinity of 34,200, and the target to make sure that the risk reward ratio is also favorable enough, we will have to wait for the breakout below the lower band of this month's regression curve. Now that the price action has moved in the lower band of this regression curve, we have seen this curve flattening to some extent, and if it remains, if the price action remains the way it has, we can see in due course of time the regression curve might start to incline on the lower side. So that remains a possibility, and then that will add to the more confirming factor for shorting the Dow Jones, and we might see it having a domino effect and ultimately pushing the Dow Jones even towards 33,000 mark. So in near term, in today's session in particular, you can continue to target the price entry anywhere in this price band of 33,950 to 33,000, sorry, 34,000. So we have this confluence area of 200, 150 SMAs, and this is also the price area which I think is providing us the sharp stop loss and the target price range. And here, as I said, the risk is not that high. Of course, we have to be patient. Even today, though it's looking like that we might finally see a break, but we can't really say with certainty, and that has been the case for last couple of sessions also, where we have to wait for any sharp move in either direction, and maybe it might happen today or it might take a couple of days more, but the formation is still quite conducive for the initiation of the short sale trade. And as I said, the price band anywhere closer to 34,000 is a good enough entry point for short trade, while keeping the stop loss just a little above the immediate swing high. And on the lower side, of course, you will have to make the risk reward ratio 1 is to 2 or better than that to make sure that even if we happen to lose money in some of the trades, we should be able to more than recoup the losses. So that's the major reason for keeping the target price wider than the stop loss. And with that, the session is also coming to an end. If you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous time ahead. Do subscribe to the Microscopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.